Hey guys, can you hear me? I'm excited to welcome you guys back on Exness's live stream. It's interesting to see you guys again. As usual, you know how we do it. You give me a brief intro or insight into where you're joining the live stream from. Where are you watching this morning's live stream from? So I have people watching from Ghana, Uganda, Rwanda, Abu Dhabi, Kenya. Amazing. Nigeria, Rwanda, Kenya, Nigeria. Somebody's in my bed. South Africa. Amazing, guys. It's good to see you all again. How's the market treating you guys? How you guys doing? Are you making money? Or is a long story? Anyway, guys, last week we did go over a lot of pairs, and then we did break down my expectations on a lot of them. And one advice I'm going to leave with you guys is that anytime we have a live stream, right? Anytime we have a live stream, you should follow through on the perspective I leave. You should follow through on the analysis that I leave. Right? You could possibly take a screenshot or a picture of what did Kojo say the market will do on GBPUSD. What did Kojo say the market will do on GBP card? What did Kojo say the market will do on gold? Right? What was my expectations? Then what you tend to do is that you follow along throughout the week if the setup is playing out or not, right? And I think that is going to give you a good learning curve. Apart from that, what you can also do, you can just come back to the YouTube live stream, right? You go on Exness's channel, there's like the YouTube part, right? And then you can actually play back the video, right? The live streams are always saved, right? You not find them in the main YouTube homepage, but you find them in the live section of the main YouTube channel. So you just watch, you see videos, what shorts, then live. So you go on the live, you find it, and then you play it back, and then you learn. You'd be surprised to know that even me, most times I come back to watch my own videos, right? I come back to watch my own live streams because it's introspective in nature. You, as a trader, you always want to come back and see how your analysis played out. You want to come back and see if your perspective was right. Are you doing things right? Are you doing things wrong? What can you change? What could you have done better? You know, so somebody's calling me Dr. Kojo. I think you guys get exactly what I mean. So moving on, right? Moving on, we did look at GBPUSD last week, right? And I left this arrow there. I didn't put this arrow there this morning. I just checked my chart. I'm like, okay, you know, GBPUSD arrow that I left from last week's live stream. I was like, this is my expectation. I want the market to trade off from this range. Then it did. What do you remember me talking about? I did say that due to the nature of how the market was trending on an uptrend, I did expect that we were going to have some level of retracement, maybe back into like a range around here, which was where the fib level was, and then the continuation. This was like midweek last week, and then it didn't happen that way. So when I was talking to you guys in the previous live stream that we had, the market was actually sitting exactly on the support level. Then I'm like, my expectation is that the market is going to bounce off from here, you know, because the reality is that when there is not any major fundamentals disrupting the market, and you have such a lengthy pullback like this, right, probability is that it will find a key zone, right, or an important zone. It could be a support level, it could be a Fibonacci range, you know, and then rest off from that range and then go higher or continue from there, right? There is this key information I've been leaving with you guys all the time. I don't know how many of you still remember it, and I don't know how many of you practically do take note of it, right? But I do always mention that as traders, you cannot more like overlook, in terms of currency pairs that we trade, what we call average pip movement, right? Because every pair has the number of pip it will usually move in a day, number of pip it will usually move in a week, number of pip it will usually move in a month, averagely, right? The same way, right, the swing moves in the market as well. Average swing, right, average pips in swing is something you can also consider, right? Look at this. If I pull this one, right, from here to here, what's the pip we're seeing? What's the pip value that you guys can see? Averagely what? 400 pip-ish, isn't it? If I pull the same thing from here to here, 370, still in the same range. If I pull this one from here to here, the same 360, 370, thereabout, right? And then I come here, from here to here, 600, from here to here, what, 450. So you're going to observe that as you scroll back, you're going to observe that most swing points in GBPUSD, right, when it has itself to do it, right, backed by no fundamentals, we usually do at a swing point 300, 400 pips. So if you are watching the market and then you see that, okay, I'm expecting the market to make a retracement up to this level, right, you put your fib there, you pull it, you know, and then at that point you're probably expecting the market to come and tap into a range like this, and then the market doesn't do that and quickly goes down, right, to a new level. It will probably be very tricky for you as a trader to expect that within the same level it was just going to break and continue going lower like that, when there's like no like catalyst moving or no fundamental like just driving it heavily down there like that. So that was also one of the perspective, or let's say that was the notion or speculation that I used to determine that we're probably going to have a reaction around here, and I was expecting it to go up from here, and lo and behold, just did exactly that, right? GBPUSD just hit that level, and straight away it's just been trading and going up from there. Now we're here. What is my expectation? still we're in an uptrend, right? If you look at it for like the last 1 year, right, since the beginning of this year 2025, the pound has been dealing with the dollar, right? The pound has been bullying the dollar. See, sometimes we talk about trading and then people don't understand the essence of it, like in terms of how realistic the exchange rate really affect our daily living. You know, I earn in USD, right? I trade in USD, I withdraw my profit in USD. Every business I do, I'm doing it in USD. But being in the United Kingdom, then I'm spending pounds, right? Because of how the pound is bullying the dollar, then it makes my expenses very high here, right? If I go to the Louis Vuitton store or Gucci store or restaurant or anywhere and I purchase something that costs £1,000, I am actually charged $1,360. So extra 360, right, for the exchange rate sake. So it means that if I did any transaction last week thereabout, instead of paying 350, 360, I would have been paying 370 because of what the exchange rate movement. So don't always think about exchange rate as some fictitious thing. It's practical. You know, if I purchase anything that costs £2,000, I'm literally paying $2,700. So so it's real, you know, it's very real. So it kind of also tells you the reasons why you'd have like central banks intervene when the market is or when another country is extremely bullying their country, right? So what is my expectation? We're still in an uptrend, but if you check all of the previous lows, right, in the uptrend, we never really had any equal low as such, right? This is one of the major equal lows that we have here, and it begins to throw a sign. Does that mean we're beginning to see the trend bend, right? Because if you watch here, right, let me zoom in properly for you guys to see. If you watch here, we have the inception point here, we have a low here, a low here, low here, another one here, then we have this one here, right? Perhaps this was the next closest low we had, 1, 2, and then the market coming back here, 3, right? And anytime we have situations like that, right, then it means that what the market is probably exhausting the trend. You know, it's been a long time from the beginning of the year. Like dollar has been just weak against the pound for a long time. So now that we begin to see like the some key levels holding off, the key level being 1.3400, right? Normally what you observe the market do, it will attempt those levels for quite a number of time and eventually come with a full momentum or a greater force to break it. So there'll be two things you would observe for such things to happen. First is how structure plays out. You know, remember, these are the points where we begin to take true interest in the market, because if you watch a zone like this, right, where the market had rejected previously, right, and then you have this peak here and the market is just retracing, what would you observe? You'd observe quite a number of things happening here. First, you could regard this as a left shoulder. Could you possibly regard this as a head? Would we have this come into it as a right shoulder? And then now the bigger trend begins to like reverse. That'll be like something to look out for, or an interesting perspective to add on to what GBPUSD wants to do. If I put a fib from here to here, right, I kind of squeezed the fib in a bit, but if you put 61.8, 78.6, you should find it around the same range. and then potentially, who knows, we could be making our way back down like this. Potentially we could be making our way back down like this. So that would be my first expectation. Other than that, right, so let me probably just like widen the range. Yeah, so you see with that one we have it sitting there exactly. So come into that range and then perhaps like drop from there. So that'll be like my first expectation. That'll be like inverse head and shoulder. No, in fact, not inverse, actually head and shoulder pattern like that. If we don't get that, then my next bet would be maybe come back into this range again, right? If we don't get the market reacting off here, candle pattern showing us signs of weakness and dropping, then we're likely going to get the market continue to this level. After continuing to this level, right, definitely we're going to have some reaction there. If we do have a reaction, we'll probably have the market retrace a bit and then like continue. Like what I don't like to do is make more than 3 forecasts on a single instrument. That makes you overly ambitious, right? 2 is enough. What I mean is that you'd have some guys come onto the market and say, and I expect GBPUSD to hit here and come down here and go back here and eventually come down here and then eventually go back here. You know, we get a lot of those type of analysis. You're not a soothsayer. You are not a god over the market. You are just a market participant and a speculator. So you cannot go, you know, 4 times, 5 times ahead of yourself of what you expect the market to do. Ideally 2, right? So take note of that. If you're a fan of drawing so many lines on your chart to display affluence or authority, probably not be doing yourself any good. So first, have the market come into this range. We want to see reaction. If that doesn't happen, we expect it to come into this level. And for what I know best, if the market should come into this level, we'll probably get like some reaction of it and then maybe continue from there. But so I'll leave this one hanging in there like that. You know, my 2 expectations, either we play around here and then come down, or we play around here and then come down. So that's like our sniper gun. Got to get our sniper guns ready, you know, in the market. And as snipers, this is the essence of being a sniper trader, being that you mark your territory and then you just wait for the market to come into those territory before you execute. If you trade impulsively, you're likely not susceptible to making the right decisions, or you're susceptible to making wrong decisions. You know, so you just open your chart, you see the market going anyways. Okay, this is a buy, let's buy, or this is a sell, let's sell. You with experience, you learn that the best traders actually mark out their setups prior and then execute when the market comes to them. Allow the market to come to you, let it flow to you, don't chase after it, right? That's one of the best speculation tricks that I can leave to you. If you learn that, master that, I think that it will be a very defining moment in your trading life, right? It may seem a bit tricky and confusing, but if you reach that point where you're able to like analyze the market has not got to that zone yet, right? But you expect that if it comes here, this is the reaction I expect. Then you do that first, second, third, fourth, at least 10 to 15 times, and you have it mostly right than wrong. You have like 80% win rate on 80 to 85% accuracy of calling that. Then I usher you into profitability, right? Feel free to drop questions in the chat. Definitely I'll look at it and then respond to it. So yes, we're done with GBPUSD. Let's go quickly, right? Time is gradually creeping in. I think my GBPUSD perspective is pretty clear and perhaps like more viable. What do you guys think? Does anybody have a different opinion, perspective? It's always welcome, right? And you know the best place to establish your opinion and perspective on charts. You go on kojoforex.com, the forecast section. You can always just drop your opinions and perspective there as well, right? I see traders dropping their opinion and charts, and it's pretty interesting, right? For all that we're doing, guys, remember that we've not even checked out the fundamental, right? It's always important to look out for what the market has in store. And if you look at today being Thursday, there's a bit of fundamentals going on, right? There's a bit of fundamentals going on today. We have flash, manufacturing index, European Central Bank press conference, unemployment claim, monetary. There's really nothing so scary, right? Because anytime I'm looking at fundamentals, I'm looking out for, do we have inflation numbers coming in? Do we have interest rate? Do you have gross domestic product? And then do you have unemployment rate? Those have proven times without numbers to actually have direct implication of the market or direct movement on the market. So a little bit away from that, then I was sharing with you that if you go on Kojo Forex, come to the dashboard forecast session, a lot of traders have been putting their perspective here, and then your opinions are always welcome. Just come and drop what you think is going to happen in the market. We'll discuss it as well there. But yeah, we've talked about GBPUSD. Now let's go to GBPJPY. GBPJPY is a very interesting one because that was like the first analysis that I put out in the beginning of the week, right, in the community. If you look here, right, similar to GBP USD, GBPJPY has been trending extremely upwards, right? And then we made like this peak high here, right? We made this peak high here, and then what was my expectation? So beginning of the week, this was where GBPJPY was sitting, right? And I did drop a thorough analysis explaining to the community members why I expect it to come back and test this trend line. You can also see that it's also giving signs of exhaustion already, and so there's possibility that with what we're already observing with GBPJPY, right, with that exhaustion, then there's going to be a potential trend change. And how we see the trend change, probably make a lower high and then go on to make a lower low, right? Because that's where the market currently is. And to give you a true perspective of that, again, I invite you to go to this dashboard, go to forecast. You can see Kojo Forex forecast, and then open GBPJPY. You can read my script around it, and this was exactly how my perspective or expectation was for GBPJPY, and then that is exactly what we have seen happen here, right? You see, dropping from that place and hitting exactly on that level. A lot of traders took advantage of it. Remember, again, as caution, that everything here is for analytical purpose. It's not an invitation to invest or trade. So it's just for learning curve. So don't make the mistake of banking all your expectation on opinions that I solely share here. This is my personal expression and personal opinion. So I expect that the market to again maybe play around here, move back a little bit, right, within this range. Right, I'll put this one here, and then what I can do to gain some level of accuracy, right, then I can actually put the Fibonacci there. Right, we've had it tap into it already, right? We've had it tap into it. If you look at it, because this was how it was actually looking, right? You see, it came down, pulled back, and quickly just hit that level multiple times, and now here we are. So it's kind of created its own type of a mini rising wedge, right? And it's likely to just break out from here, right? Break out and continue downward. So maybe it's due for us to expect a sell-off on GBPJPY, and the best take profit point for a setup like that will be around this range, right? This other low right here. So yeah, keep your eyes fixated on GBPJPY in this manner. Ooh, see some of the questions you guys have quickly. Can a pro like him be always 100% sure on what time to enter market and what time to close it? The truth be told, nobody is perfect in the market. Everybody is susceptible to mistakes in the market. There is no holy grail in trading. If I tell you that I've got all the answers, that's a big lie. But with experience, with years of practice, with dedication, with real results and proven track records, you'll be able to know your strength and weakness. You'll be able to know your wins and losses. You'll be able to measure your proficiency, and the only thing that is going to do is just give you confidence to enter once your setup aligns with what you expect. But I don't think that there's anybody that just has all the answers perfectly written and then they never make any type of mistakes in the market. No, somebody thinks that Kojo and his peers don't get losses. We do suffer losses in the market as well, right? And we do share that from time to time. If you watch me in the community, there are times I'll genuinely take a loss. I'm like, guys, today was not a good day. Become hard again the next time. So anyway, let me focus on breaking down the chart. We would have like some 5-10 minutes to actually delve deeply into some of these questions. It's pretty interesting seeing your perspective, by the way. So yes, that is my simple expectation of GBPJPY, right? Can we discuss CAD? I've not been watching it quite recently. GBP CAD. I'll leave that for now. Probably come back to it. Let me just switch instrument quickly. We can go into oil, right? Oil, I think last week this was exactly our chart breakdown. Oil, I expected it to come into these lows. What happened? We saw it pull back and then playing around. But if you watch even this pullback, right, which is what I've taught you guys times without numbers, if you watch after I left that range, right, you put like your low there within this level here, and then let's say you're expecting, this was your expectation on the market, right? This was what oil is doing. What would I expect of my traders, right? After you've seen this surpasses 25% retracement in the market, which makes it legitimate for you to start measuring your pip. When I say 25% retracement, what do I mean? So see here, this is 1 point of high in the market and 1 point of low in the market, right? So if this place is 0 and this place is 100, right, then what is this place? This place is what? 50, right? And if this place is 50, then what would this place be? This range be likely what? 25. And then what would this level be? Likely what? 75. Right? So anytime I am trading on the market, I use this mathematics. It's simple, right? Some people get scared of trading because they're asking, Kojo, is it too mathematical in nature? And I'm like, these are just tips and tricks that you use. So anytime I analyze the market and I see something like this, my mind is already measuring the distance and then putting in perspective the retracement breakdowns, right, which is like the range I carved them into a 0 and 100 perspective, 50 in the midpoint, 25. So the moment I see the market make a 25% pullback, right, which is like when it reaches a level like this, right, then what do? I quickly will slap my Fibonacci level on it, or draw my Fibonacci range on it like that, right? Because 25% retracement means that there's likelihood for it to continue even further. So if you put your Fibonacci there, what did we observe? The market come into that range beautifully, which is like between the, that will exactly be between the 50 and 61.8. It will be between the 61.8 and 78.6 retracement levels, right? And then continued lower. Do you see that? Came, retraced into the range, and continued lower. So what would I expect? Now it is making another retracement again, right? So do we think that oil is still going to come into that range again, right, and then continue further lower? It's a bit tricky, especially with this particular expectation. Why? Because normally when it hits a fib level or fib zone like that, and then the market is making its way down, we would have expected that it will make it will trade lower. Would have expected that it would trade lower than the previous low, right? But we do observe that this one did not particularly trade lower or break that low. So I will just explain what I mean in a second. Let me just clear this chart. Yes, what I mean is that with how oil was coming lower, you see this low here, would have expected that it would have broken this low, right? Break the structure, come down a little bit, then before it makes that retracement. Then if he had made that retracement, it's easy for us to expect that will come into that zone again and then perhaps continue. But since it didn't break that level, right, then it makes it really tricky to expect that it was going to just like retrace from here, come into here, and continue again. You know, I think that's some of the mistakes that people make. They're not able to have a coherent thought process on expectation of the market, or a vivid and a rigid technical perspective. If we say market structure is always going to create higher high, higher low, and you're seeing higher low equal low, and then the market is reversing, then you should be shaky with your expectation if you're just drawing the same analytical things, or dropping your analytical tools on things that are not following what the technical are seeing in the books. So I'll leave oil, you know, hanging for now, right? It'll be hard for me to make any expectations for now, so, or any speculations for now. We'll come back to it later. And now we can look at US tech, which is NAS100. Also, this was our perspective last week, right? You did remember that last week it was trading around this range, and I was telling you that my expectation was that it was going to visit this high and perhaps trade even higher than that. All of this analysis, it was just left on the chart for our perspective for this week. So it's been interesting how it just occurred, right? What do you observe? Broke that level, eventually did visit that level, because last week it was here, right, when we were talking about it. And I'm like, if the market does come very close to a level, a previous level like that, then it's likely to surpass that level, especially being that the trend is an uptrend, right, and there's no sign of a trend change, right? So I knew that it was quite magnetic for the market to make its way to these previous highs, right? So many traders were asking me that should they buy? I'm like, yes, if you have the proficiency. You know, obviously it would be risky. Why? Because if you're taking a trade here, you're going to have to be using a subjective stop loss, right? You decide to put a stop loss beneath the candle, or 20 pips, 50 pips, 100 pips. Because ideally, if you're taking a trade like this and you want to be safe, if in fact you're taking any trade and you want to be safe, you want your stop speed to be beneath that candle's low, that structural low, right? And that would not make a proper risk to reward. So it's like, if you want to take it, you might as well just, you know, be very calculated. And then you still had some guys really chasing chasing it down, and they made a pretty interesting trade with that one. So we had that candle blast through, break that level, and came back to retest, went back up, came back to also retest the same level. You can see that one thing you're observing is that after it broke that level, every candle that traded beneath that retest range is a wick, right? And so I tell traders that what that wick, it communicates a lot. What does it communicate? It communicates exhaustion, right? It communicates exhaustion. Exhaustion means it's like I gave a very practical, or I gave a very, I say, seemingly knowledgeable insight into like how you define candlesticks and then their behavior. And then especially with wicks, when you have them building down like that, right? I see them like fingers, right? You know how our fingers are, right? Just like spiky down there like that. Imagine that this range that I've marked here, right? Imagine this range that I've marked here is like hot water, right? Imagine this zone that I've marked here is hot water, and then you dip your fingers in hot water. What do? You withdraw your fingers quickly. Of course, nobody wants to sustain a burn, so it's the same thing with the market. Anytime you see the market, tap into a particular weak zone or range and then it pulls back, it means that it's failing to hold there. It means that it's sustaining some pressure within that range, and then your expectation will easily be what the market continuing its trading direction from there. You can observe that alone is a trading strategy by itself, what I just explained, right? Look here. If you see a weak build up down there, what would you expect? We expect the market to continue higher. If you see a weak build up here, expect the market to reverse, right? You can just do a back test, right, and then confirm from experience to sustain confidence. And so anytime I see like huge wicks in the market, one of my simple expectations and speculation is that what the market is going to continue in the direction it has established. And this is not only prevalent in NAS100. You'd see that also happen from time to time, even in currency pairs as well, right? And it's one of the key signals that I take in making trading decisions or telling long-term directional movement of a trend. So pay particular attention about it. Somebody says, is this trading view? No, this is Exness's trading terminal, and it's actually very free. You don't pay any subscription, and there's no adverts displayed on it. It's actually very, very interesting. I know so many of you are sleeping on this terminal, but it's a very beautiful terminal, and you can actually trade directly from here as well, right? In fact, if you click here, it shows you that you have an inbuilt risk to reward, right? You determine your take profit level, your stop loss level, and it will automatically tell you what lot size to put. You can decide to put your take profit level by price, by pips, in money, in equity. You can decide to put your stop loss level in pips, in money. Let's say a stop loss. Okay, I don't want to lose. Stop loss in money. I don't want to lose. Let's say $200, or you determine anything you don't want to lose, then it automatically set those levels for you. Anyway, another tutorials on the platform later, perhaps maybe it will come out on my YouTube channel. But yeah, so now what do I expect? You see this level right here, market came there, tapped on it, and then we're getting some bit of reaction. Right now, it's actually surprising that we've been making history. But we don't recount making history. Why? Because I think we've seen it over and over and over. So it's like Nobody even like talks about it anymore. What is the history I'm talking about? You guys know that at this very point here, right, is the highest point ever that NAS100 ever traded in the lifetime, right? In its lifetime. If I put it on the monthly time frame, you guys see NAS100 has never traded beyond that level from the time that instrument started trading on the market, right? It has never crossed that level before, or it has never penetrated that highest point before. So history is being made, right? Sometime in the future, some other traders are going to come and be like, in the year 2025 around July, NAS100 hit this point and it was the highest point. But you are practically experiencing it now. And due to that, one of the most trickiest thing is, as traders, it's hard for us to tell exactly where that is going to end, right? Because you would think that, oh, this is the highest point NAS100 has ever traded and potentially ever trade. Then you wake up to this level and you say, okay, this is the highest point it has ever traded. Then you wake up to what? This level. This is the highest point it will ever trade. Then you wake up to this level. This is the highest point it will ever trade. Then now we are here. Do you get what I'm explaining? Because like if we go down and down, every peak there was the highest point it ever traded, right? Every peak there was the highest point it ever traded, right? Here was the highest point it ever traded. Here was the highest point it ever traded. Here was the highest point it ever traded. And so many people are trying to pick the tops, be like trading the highest point. You know, okay, so we have a bit of price action here, so I didn't regard that though. But when I mark this here, then it means that subsequent to that one, right? Subsequent to that one, then the most recent highs we are seeing is this one here. So this one was previously the highest, and then it came back to retest it. That's also a whole like different story altogether, right? I think this should have been in 2025 February. I wonder what fundamental event may have driven this to sell off. I quite remember exactly what it was, but I don't remember the story behind it. I don't know if it was Trump and tariffs. I think so. It was when Trump assumed office and he started the whole US sanctions and tariffs, and that was what we saw, you know, NASDAQ heavily sell off. The sell off that you're seeing here is not a joke, you know, and then price quickly just bounced back, now to surpass that level, and then now creating highs and highs and highs, you know. So right now I can't tell you that this is the peak. I think we're going to break this level and create even new highs. You know, the only way for you as a trader is to find how to participate in the new highs we're creating. And the best way, if I were you, is I'd have been going with the trend, right? There is a bit of psychological blockade in so many traders' mind when they see the market going up. Instead of them being patient to flow with the trend, then they want to be contrarians. Contrarian means that they would rather try so many means to keep shorting an instrument like this, right? They'll try shorting it here, they'll try shorting it, you know, like they see this movement, they try shorting it from here, then the market slaps them. They see this movement, they try shorting it from here, then the market wicks them out. They see another small movement, they try shorting it from here, right? Then the market just wicks them out, and then they keep up with their pace of what? Shorting and shorting and shorting. If they have big liquidity, then they could easily be trapped, you know, with losses compounding and compounding and compounding like that. But they can clearly see. You don't need a soothsayer to tell you. You don't need a magician to tell you. If you put this chart bit in front of even my my 2 years daughter, and then you ask her that where is the overall direction of this, she's definitely going to be very accurate in telling you that it's going overall upward. So you'd be surprised to wonder how you'd have like very matured and experienced people not be able to like follow a simple rule like that. So with this, then like I said, you will do yourself good to rather wait for the market to make pullbacks, and then you find a trade in the direction of the trend, right? And that's what's similar to what we had last week around here when the market made this huge pullback, and we have these wicks here. So if I'll be generous enough, right, this is not much of a deep swing for me to expect a pullback. So I'm very cautious in drawing Fibonacci on it. You know, this is quite a bit of a tiny swing to just expect that the market will just like make its way down here and then like continue. But if there's anything I'd rather at this point in time, I probably like rather expect that instead, you know. If not, maybe just to have the markets like break it from the same range and then continue, I mean, trading higher until whatever point it wants to. And talking about whatever point, then I would expect it to always play around, you know, the round figures, right? 23,500, 2,400, right? I like to play it in pip range of 500, right? So 23,500 is just right above us there like that, right? And then 2,400. And so I mean 23,500, yeah, and the 24,000 is just above here like that, yeah. So if anything, let's see how magnetic Nasdaq trades close to 23,500. I think it will likely visit 23,500. Then I put 23,000 actually down here, right? So we have a bit of a range to play with, right? So I always tell you guys that sometimes if you don't have like your key levels marked on the chart, then it's like you're playing in an island. The moment you draw that key levels, right, then it begins to like give you a true perspective and a range in which the market is playing. So let's put 22,500 here. So we have 22,500, and let me remove this one. Then we have what, 23,000, 23,500, and 24,000. Yeah, so you can see how the market has just been playing in between that range. And don't also overlook the fact that as much as we're trading, it's also kind of trading within this channel, right? Bouncing off in between this channel. It's likely it could easily come back, you know, and then perhaps which will also be in confluence with the channel, and then suddenly make its way to this level, which is also going to still be in confluence with the long-term direction of the channel. So yeah, I'll just keep this one here like this. We'll revisit it again, and then we see how it plays out. Let's see with US30. Similar to it was the same thing that I said. If you remember, this also was coming from last week's analysis, right, where I was actually expecting that we make our way lower and go high, and I said that you see that I drew two arrows. I was like, sometimes you would not have that happening, you would have it like run through like that. And then if you look at this in particular, it was more like eventually broke it, came to retest it within this range, right? Retest that range, retest that channel, right? Falling wedge channel, and then use it as a support to trade higher. So in its history as well, currently is also the all-time high that we're observing here, right? And for this is already sitting on a key psychological level already, which is like 45,000, right? If I put 45,000, this is the highest it has ever traded, surpassing this level right here. It was just right beneath it, 44,800 thereabout, right? So it's also hard to tell if this is going to be the peak, right? The structure does not even seem as if it is the peak. So what do we know, or what do we expect? We'll probably make our way to 45,500, 46,000, I don't know, and then keep going higher like that. But if you didn't find any trade within this range to continue, and then you're holding, then it will be like extremely tricky to want to expect any trade setup now, right? We want to see the market maybe trade higher, make some form of a retracement eventually, then we can continue the trend with that retracement. That would be ideal situation to find entry. So that would be where I'd leave US30. Then finally we can talk about gold. A lot of you have been waiting for gold. You're always waiting for my gold. But before I even go to gold, right, which is like the final instrument I want to talk about, right, then we can touch bases on Bitcoin as well, right? That was in fact the first instrument we analyzed last week. If you watch Bitcoin, something funny is happening, right? Last week when we were discussing Bitcoin, it was actually still trading around here, right? And I said that I kind of picked out that triangular channel, right? Asymmetric channel, and I said that I expect this to continue higher. You can do a quick introspection on the YouTube. Go to Exness's channel. I think it was this particular one here. Let me quickly look for BTC. Something I want to show you. I hope I see it quickly though. I couldn't seem to find it. Probably have to like play back slowly to find it. But anyway, I'll continue. So it was looking something like this, right? And then this was my expectation. I also dropped it out in the community as well. But see eventually how it has evolved from there, right? You see how it has evolved, as if it's not going to play out. Normally what you get the market do is that it expands your perspective of what you think is true. What I mean is that nothing has changed. It just made the triangle just a bit bigger, right? It just made the triangle just a bit bigger. You see I drew the small one there and it was looking perfect. Now if I remove this one, then you still see what? A triangle forming, isn't it? Which means that what? The expectation, if indeed it should follow the triangular pattern or resultant effect of a triangular pattern like this, is expected to be even much bigger, right? So the smaller the formation, the smaller the impact, the bigger the formation, the bigger the impact. So I still hold my bias strong to see BTC break this eventually and then make its way higher, right? And that is what I'd leave for Bitcoin for now. And we come to gold, right? Very interesting. You can see what we have with gold here already. Last 2 weeks we had it play perfectly on the fib level, and then our expectation was gold going to make its way into the fib extension, right? And then we did discuss it And then that was last 2 weeks. And last week, where the market was trading around here after that spike, we're literally here that previous day. And then I did point out that what we can already observe some type of a brief channel where gold was like trading in between, and there's possibility for it to like break out, which also coincided with the fib levels. If you put it there like that, you can see. So see the series of fib zones that gold has been trading in between, and that's how you follow a trend, right? And that's how you follow a trend in the market, guys. The market goes up, it pulls up into the zone, it continues, it pulls back into the next zone, it continues. Is it going to pull back into the next zone? Then it's easy for us to slap that fib there like that, right? And then see if the market is also going to come back here, right? Come back here and then continue. But the thing with this is that the structural differentiation is quite evident, right? In a sense that let me remove this drawing tools and then even break it down better. In a sense that if you look at this particular one, right, what we observe is that gold actually did break that high violently, right? This high here, right, after trading in between this range and breaking it, it broke it. I was expecting that it would probably even peak at the previous resistance level, right? And then it came back down, and now it's sitting exactly on this level, right? Which makes it a bit tricky. There are two things that can happen. It can either use it as a break retest continuation, easy, very easy, right? Very easy for such a thing to happen, or it can actually dip down lower into the zone itself, which is like that deep retracement, and continue from there, right? So if you were a trader, what would you do? It's a question I'm posing to you guys. Would you expect the market to, or gold to continue higher from here directly, or you expect it to trade lower before going high? And if I want to assist you with this puzzle, that is one of the reasons why I add the confluence of that's why I add the confluence of candlestick formations, right, or candlestick patterns in trading, which is like if I'm swinging, right, if I'm day trading, you are going lower, right? Day trading in gold, you're looking at like the 15 minutes, you'd find candle confirmations which will easily tell you to quickly buy, and then you easily make some 40 pips, 30 pips to turn around, and then sometimes some quick day trades can become a huge swing trades, right? But now we are limiting it absolutely to the 4 hours. So every confirmation we're looking for it from the bigger time frame. So with this, then I expect that find some candle confirmations either here, right, as outlined, or in this zone, and then it will make its way higher. So yeah, finally guys, I think this is my expectation generally on all the instruments, and then this rest of the week, today being Thursday, tomorrow Friday. In fact, we can't expect much of the market before the weekend, but this analysis that I've given you, I think that it will run even as well into next week as well, right? This analysis and perspective, I think it will run even into next week as well. So remember the advice I gave you, right? Remember the advice I gave you guys. The advice being that if I were you, I'll take screenshots of all the setups and all the expectations Kojo talks about, and then follow through, right? Because it's like your learning curve. It's like what guides you, right? You do your analysis concurrent to mine, and then eventually you begin to do it by yourself and compare it to what I've done, and then you see that you're on the right track, right? So a few, let me say, talk about euro, right? I didn't get a time to delve deep into that, but there's something that I wanted to show you guys, right? Maybe I'll do that as a last thing, then we can go. If I put the XY here, right? You see the XY is a dollar index. Last week we talked about it briefly, where it was already trending lower, right? And then what did we do? We pulled a fib from here to here, right? And then we said that what dollar index hitting this range is likely going to trade lower, because like a swing, pullback, continuation, right? And if dollar index is trading lower, or selling off, what instrument do we expect to buy? We expect GBPUSD. In fact, all crosses, all USD crosses where USD is the quote currency would be going up, right? So euro USD, euro USD, look at it, perfectly in that zone as well, right? Because the dollar index was continuing after that retracement, so you had it make a huge swing, pulled back, tapped into that range perfectly, and then continuation like that, right? So what's my expectation? I think I'll see it continuing to trade higher, maybe back into this level right here, or perhaps even surpass it, make another retracement and continue like that. So that's like a brief touch on euro. Euro JPY, I kind of look at it similar to what I did discuss with GBPJPY though. So guys, sometimes when I give you analysis on one instrument, what I expect or what I kind of assume you should already know is exactly what we call correlations, right? And cross references. So correlation is that the analysis and perspective that I gave with GBPUSD, you can actually put the same type of criteria to your expectation on Euro USD. And the analysis that I gave on GBPJPY, you can put the same perspective and criteria on Euro JPY. So sometimes when I talk about GBPUSD, don't assume I'm only talking about GBPUSD. I may be indirectly and interferably also talking about Euro USD as well. And the same time when I talk about GBPJPY, you should perhaps sometimes know that I'm talking about Euro JPY. The same for NAS100 and US30, right? So they play hand in hand, like the same for Euro NZD and AUD NZD, right? No, I mean Euro AUD and then Euro NZD. Yeah, that's what I meant. So Euro NZD and then Euro AUD too. Yeah, I think that should be all for now. It's been a pretty interesting live sessions. Like I said, I'll leave just like our time is up, but we have barely 2 minutes to speak, answer a few questions. Sounds like our baby is crying. You guys, because he surpassed. You're trying to bring him down. I don't understand what is going on. Anyway, probably take me a while to read and then be accustomed to the conversations in the chat, but I think you guys did enjoy the lives. Follow along, let's see how it plays out, and I wish you guys all the best in the rest of the week, and I'll see you guys next time when it's announced. Have a great rest of